This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
The European Union could cope with a short-term halt to all Russian gas imports, but doing so would have profound economic consequences and require emergency measures to curb demand, according to analysis by the think tank Bruegel. Escalating tensions between the West and Russia over Ukraine have raised concerns about Russian gas flows to Europe, prompting the European Commission and the United States to investigate alternative supplies. In an analysis due to be published on Thursday, Bruegel said that if Russia cut off all gas, the EU would need to both hike imports of liquefied natural gas, LNG, and impose emergency measures to cut demand, such as factory closures, to avoid severe shortages.
Oil extended gains to 7-year highs above $90 a barrel on Thursday as the Ukraine crisis outweighed signs that the U.S. Federal Reserve will tighten monetary policy. Brent crude futures were up 89 cents, or 1%, at $90.85 a barrel by 12:17 GMT. U.S. West Texas Intermediate (WTI) crude futures were up 87 cents, or 1%, at $88.22. Crude prices had surged on Wednesday, with Brent climbing above $90 a barrel for the first time in 7 years amid tensions between Russia and the West. Russia, the world's second-largest oil producer, and the West have been at loggerheads over Ukraine, fanning fears of disruption of energy supplies to Europe.
Moving on to the top news in the energy sector.
U.S. crude oil and gasoline inventories rose last week, alleviating a bit of the market's concerns about supply. Though fuel demand surged close to record highs, the Energy Information Administration said on Wednesday. Crude inventories rose by 2.4 million barrels in the week to January 21 to 416.2 million barrels, compared with analysts' expectations in a Reuters poll for a 728,000 barrel drop. Gasoline stocks rose by 1.3 million barrels last week to 247.9 million barrels, the AIA said, the most since February of 2021. Analysts were expecting a 2.5 million barrel rise in stocks. Gasoline stocks generally build during the winter, a less busy season for driving.
Sweden's government said on Thursday it had asked Parliament to approve plans to cut taxes on petrol and diesel amid a surge in energy prices that has seen electricity bills and motoring costs soar. The government said the plan would cut pump prices by around 50 or around 5 cents per litre, reducing tax income in 2022 by around 2.4 billion Swedish crowns, $257 million. Crude prices have soared since the spring of 2020, rising from around $20 per barrel to around $90. Next, we have the top news in metal. Swiss gold exports rose last year to their highest since 2018 as demand for bullion in China and India, the biggest consumer markets, recovered from a collapse early in the COVID-19 pandemic, Swiss customs data showed. The coronavirus crisis upended the bullion market in 2020, hammering jewelry sales while triggering a rush among investors to stockpile gold, which is traditionally seen as a safe place to store wealth. Switzerland is the world's largest gold refining center and transit hub.
Dalian iron ore prices rose on Thursday on hopes of robust demand for the steel-making ingredient in China when steel production curbs are eased after next month's Beijing Winter Olympics. Prospects of tight supply also kept a bullish tone intact for iron ore, even as some traders stayed out of the market ahead of next week's Lunar New Year holidays. The most traded May iron ore contract on China's Dalian Commodity Exchange rose as much as 2% to 781 yuan, $123.07, a ton, its highest since October 13, before ending daytime trading 0.5% higher at 769 yuan.
We will now look at the top news in the agricultural sector.
Indonesia has imposed a rule starting Thursday for a mandatory portion of palm oil to be sold domestically at a maximum price of 9,300 rupiah, $0.6465 per kilogram for crude palm oil and 10,300 rupiah per kilogram for olane, its trade minister said. The requirement comes as Indonesia, the world's top producer and exporter of palm oil, tries to curtail a rise in domestic cooking oil prices that have climbed about 40% from a year earlier, in line with high global prices. A so-called domestic market obligation, DMO, will be applied to all cooking oil producers, which must sell 20% of their planned exports to the domestic market, the minister, Mohammed Lutfi, told a virtual briefing.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.